Not many of us, but as with usual presentations, we have the standard disclaimer. And we are LWP is a small Australian Stock Exchange listed company with a very small market capitalisation. We find ourselves in a fortunate position of having about 5 million cash in bank, no debt. Our facility in Brisbane, Australia is fully paid for, and we have more money coming by way of a generous Australian R&D tax incentive, whereby if you spend $1 on R&D in Australia, you have about 42.5 cents in the dollar coming back from the Australian government. Key milestones since we completed a reverse merger in March last year. We acquired 100% of a fly ash ceramic proppant technology, a company that I founded around about 8 years ago. We've raised quite a bit of money since then. Pardon me. We've entered into a 60-40 joint venture agreement with a company in India called Hallmark that formerly made ceramic proppants made from fly ash, made from bauxite. Pardon me. And we proved up our technology at the end of last year. Our experts' reports were received at the end of January, and now we've started an international promotion, and our attendance here at Master Investor is part of that international promotion, which has now been going close to 3 months. Who's heard of proppants before? Great, only me. Well, let me tell you about hydraulic fracturing of oil and gas wells cannot be done without proppants. This short video I'm about to play now will show you what proppants are and how they're deployed. You can see there that the water aquifers in the world are quite close to the surface. So when the environmentalists cry, our water table's going to get damaged, that's not exactly true. 3 layers of steel and cement protect that water aquifer from getting damaged. People ask me, how much longer will this oil and gas downturn, how much longer will these low prices last? And I have a crystal ball, but it's not giving me any answers. What this chart shows in green is the cost of production, and the part in red is the social cost attached to that barrel of oil. So in Saudi Arabia, for example, we have a $10 per barrel production cost, but there's another $95 a barrel in social cost attached to that barrel of oil. So we have to ask ourselves, will global shale oil and gas be part of the oil business going forward? That's for sure. Will the US retain its energy security, or will it start becoming a major importer again? I don't think so. Will other countries like the UK exploit this technology to give them their own energy security? It's happening all around the world. Will the oil and gas industry continue to look for the lowest cost, best value proppant to fracture their oil and gas wells? And will the estimated 5,000 wells in the US that are already drilled be fractured one day? Because oil and gas companies have paid millions, sometimes hundreds of millions, for their oil and gas acreage. They have to keep doing work or they lose that acreage. So we believe that the outlook for ceramic proppants and for all proppants looks great in the long term. That black line shows you how the rig count has declined radically since we've had these low oil prices. However, the production per rig is up. So we've gone from 1,200 rigs drilling gas to 200, but the output is 30% more than the 1,200. Why is that? It's because of the increase in proppant demand. So every one of those little things there is a stage. 10 years ago, there were 3 to 5 stages per well. They gradually increased them, and now 50 stages and even 100 stages are not uncommon. Each of those stages needs around 250,000 pounds of proppants. More stages, the more proppants you require. A historical proppant is shown on this slide. You'll see on the left-hand side it's the market, but ceramic proppants, as you see on the right-hand slide, have fallen off the map. Last year there was 50% less ceramic proppants used. The reason is that deep wells require ceramic proppants. Shallow wells can be fracked with only sand proppants. Not desert sand or beach sand, but glacier sand from Wisconsin and Minnesota. They have to be very spherical and very hard sands. So we spent about 8 years and $15.5 million developing a fantastic, strong ceramic proppant for deep wells, and we find ourselves now in an oil and gas market that doesn't want ceramic proppants because they're too expensive to deploy. We see the market has moved to shallow wells so they can use sand. Where does LWP go from here? The market's going to continue to grow, so the experts say. And our vision is that our proppants will become the dominant ceramic proppant and the standard for the industry. Who knows what fly ash is? Nobody? Great. Fly ash is the abundant waste left over when you burn coal at coal-fired electricity plants. There's plenty of fly ash in this country, and there's plenty of fly ash in nearly every country on the planet. We recycle that fly ash to make our ceramic proppants instead of the usual ceramic proppants made from bauxite or kaolin clay. So our proppants are strong, they are light, exactly what the market wants, and they're very low in manufacturing cost. Additionally, bauxite proppants are made right next to where the bauxite mine is, and kaolin clay proppants made next to the kaolin clay mine. Coal-fired power plants are everywhere, which means that our feedstock of fly ash can be used to make ceramic proppants right next to the shale play and save the logistic and transportation cost that comes with proppants. Proppants mined in Wisconsin may only be $80 or $100 a tonne, but by the time they get down to the oil well where they're utilised, they can be up to $300 a tonne. Mercifully, our technology can be dumbed down. So instead of making a fantastically high-strength proppant, we can make a proppant that is similar to sand, and we can compete with sand on price, wherever we have a logistic advantage. Conductivity is a word used in proppants. How easily can the oil and gas flow through those proppants to get up the well? You'll see there that the ceramic proppants break in chunks, whereas sand proppants grind like flour. So our prospect is to provide customers at a same price point than mined frac sand, a much better proppant. I'm repeating myself now. Transport and logistics are a major part of proppant costs. Our proppants are around 40% lighter than bauxite proppants. How does that affect the E&P company, exploration production oil company, from utilising proppants? To frack a standard well in the Barkin Shale, you're going to need around 187 trucks of bauxite proppants. But because LWP proppants are made from fly ash, they're about 40% lighter. So proppants are purchased by weight, but they're deployed in volume. And you can see the price difference. So proppants are the single largest cost factor in fracking an unconventional oil and gas well. We built a plant in Brisbane, Australia. Not sure how I'm going for time, 5 minutes. We completed that and utilised it last year to prove that this technology can be scaled up. Now, if any of you have ever invested in a technology, you will know that the hardest job is to scale up. Many things work really well in the lab, but they fall over when they try to scale up. All these problems that were never envisioned occur. Well, we have been able to scale up, and we have the experts' reports to prove it. I mentioned earlier that we inked a joint venture with a company in India called Hallmark. Hallmark used to make ceramic proppants from bauxite. They have put their plant into a joint venture with LWP, a plant with a replacement value of $15 million for 40% of the joint venture. We've negotiated a technology license fee of $1 million for the state of Maharashtra and royalty revenue of 10% of the sale price. So our company is not going to be a proppant manufacturer. We're a technology company, and our business is to sell technology licenses to manufacturers. The benefits to LWP of that joint venture include an early cost-effective entry into the market and the ability to know precisely how long the sintering time is. So after we granulate this fly ash clay mix, it then gets heated at around about 2300 degrees Fahrenheit or 1250 C in a huge rotary kiln similar to a cement rotary kiln. The sintering time from one end of that kiln to the other is somewhere under 30 minutes. I get it. With bauxite, it's about 2 hours at a much higher temperature. Therefore, there's a significant saving. So commercialisation and monetisation. First, to secure offtake agreements with our joint venture partner. Secondly, license our technology to various partners whom we're talking to. Our business plan is to get a one-off licence fee and a royalty income of 10% of revenue. And we're talking to partnerships or potential joint venture partners in Australia, Canada, the Middle East, the US and Mexico. We're also examining opportunities that will utilise our strong cash position and large shareholder base. Our management team is a mixture of grey heads, or like me, not much hair, and dynamic young people in their 40s. And as you know, as an investor, you invest in people. This is a high-quality team. I thank you very much for attending.